Right, in this video we're going to cover filters. Filters, as we have covered earlier, really produce a value in the form of Boolean, either yes or no. Again, I encourage you to just click notebook to follow along this. We can actually make use of the inbuilt comparison factors of Python to do this very quickly. So let's go over to the notebook that I cloned earlier. So it's the usual. I won't walk through this again, otherwise it start to get a bit stale and boring, repetitive. So filters is really two things here: is the asset itself and also a specific time in moment in time, and it generates Boolean, whether it's true or false. So you can click that to read the documentation. If you use the comparison factors, you will be able to extract true or false. So let's look at an example, a concrete example. There are a couple of things that we want to do. One is that we want to actually download from pipeline the latest close price. Here we refer or point to the US equity price. The close price is what we're interested in, and the latest. Second thing is that we create a variable called close price filter, and we take the last close price, which is this variable here, and compare against 20. This price greater than $20. So we'll run that, and then we'll come on run this. In this example, we produce a filter that returns true whenever the 10-day mean is below the 30-day mean. So we've done this. We have the 10-day simple moving average, and we have the 30 days moving average, and we just need to see if the 10-day moving average is smaller than the 30-day moving average. And if it's below, then this will return true, otherwise it's false. So we'll run that as well. Okay, so let's go through and look at factors or classifier methods. Various methods of the factor and classifier classes return filters. Again, since we haven't yet looked at classifiers, let's stick to factor methods for now. Classifier, remember, is ABCD, or in the form of grade ABCDF, in the form of rank, or the quantile, frequently used in cross-sectional equity trading, is basket 1, 2, 3, all the way to 10. So here we will look at the factors. Okay, so the factor dot top n method produces a filter that returns true or false for the top n securities. Now this n really refers to a integer value. Okay, for a given factor. Is it the top 10? Is it the top 100? Is it top 50? Okay, so that's really what that is, what that method actually do. The following method here, or following example here, produces a filter that returns true for exactly 200 securities every day, indicating that those securities were in the top 200 by last close price across all known securities. Now obviously this doesn't have a lot of economic sense. It's just really to illustrate in terms of the method, okay, the top 200 method. So if you take the last close price, again, we look at the close price and the latest value and store it into the variable called last close price, and we run this last close price dot the method dot top 200. Is it in the top 200? And then we get this filter. We store it into this filter, and we run this, and it will give us that value. So you follow along these links to see other factors and also other classifiers that is inbuilt into the Quantopian pipeline. Right, so we're going to look at the dollar volume. Okay, we're going to create a filter that returns true if the security's 30-day average dollar volume is above 10 million. To do this, we'll need to create an average dollar volume factor to compute the 30-day average dollar volume. Let's include the built-in average dollar volume factor in our imports. So we're going to first of all import this is built-in factor called average dollar volume, and then we instantiate this dollar underscore volume is equal to the average dollar volume, and the window length that we're looking at here is 30 days. So because average dollar volume requires two things, the price as well as the volume, so these are already inbuilt, so you don't need to specify them at all. The next thing is that we need to create a filter so that they generate a Boolean returns, which is the filter that we're looking for. So here, dollar volume, which refers to this dollar volume variable here for the 30 days, is greater than 10 million. So if it is indeed true, then this will return true. Otherwise, it will return false. Okay, so let's see what this filter looks like, and we can add this as a column to the pipeline from the earlier session. So make pipeline, we have the 10 days as well as the 30 days simple moving average, and we calculate the percentage difference of the 10 and 30. And for the dollar volume, average dollar volume, we explained earlier, we're looking at the 30 days average dollar volume and whether this dollar volume is more than 10 million or not, and this will give us a true and false. And in terms of the pipeline, what it returns is two things. One is the percent difference, which is this one here, and the second one is dollar volume. So the high dollar volume here really refers to this. I'm going to run this, and then we will run the pipeline again on the day of May 5th, 2015. This might take a while depending on how many filters that you're looking to do, as well as the time period that you're looking to run it for. But in this case, it's only 1 day, so it's actually quite fast. So here you can see that two false, and the percentage difference as well. There are other uses that you can use filters for. You can use it as a screen as well. So I'm going to walk through that now. So by default, the pipeline produces computed values each day for every asset in the Quantopian database. Very often, however, we only care about a subset of securities that meet specific criteria. So we can tell pipeline to, instead of calculating everything, just ignore securities that doesn't fit our criteria. So in this case, to be more specific, we just want pipeline to return us those with Boolean value of true. The false we just ignore. So the screen, this is what we do. So define the make pipeline, again the same. This is also the same. And these two are also the same. And there is a slight difference here, is that the columns percent difference is still there, but we no longer have a comma here called high dollar volume. Instead, we call it screen is equal to high volume, and we have it outside these curly brackets, but within the other brackets. Okay, so if you look at this, screen is equal to high underscore dollar volume, and if we run the pipeline again, notice that instead of returning 8,200 plus securities, we only get 2,110. And the column called high volume, high dollar volume, I think it's called, yep, high dollar volume is no longer there. All that you can see is 60% difference. And those which have less than 10 million filter out. So all you see here are those with high dollar volume. So just to illustrate that those with low dollar volume has been removed, we're gonna do this just as a visual check. High dollar volume, so I need to put a comma here. So I'll run that, and we run that as well. So again, it's 2,100. If you look at this, it's actually true or false here. So let's just say we want to see the dollar volume as well. Run that, and you notice that these are 10 to the power of 8. 10 million is 10 to the power of 7. So it's 1.0 times 10 to the power of 7. So here you can see these are all more than 10 million in terms of dollar volume traded each day. So what are the one way that you can actually invert? Sometimes that's not what you want. You want the actual inverse of it. So you can use this inbuilt operator called, well, squiggly, really. I don't know what is it called actually. I just call it squiggly. It's used to invert a filter, swapping all true values with false and vice versa. And here, instead of high dollar volume, you can use the squiggly, and what you will get is actually the low dollar volume instead. So that really ends the video on filter, or the lesson on filter. Let's take a break and we'll